All right, so we got a fair value gap here. Watch for that to hopefully hold price. We're allowing it to potentially run down into this bullish order block as well, which should be used as a propulsion block. We've got to trade into here. It didn't actually, oh yeah, it tapped into the wick and then shot off. We're approaching 950 macro as well. I'd like to see SMT between these lows on ES. There you go. So nice SMT there. Should be confirming the SMR. Yeah, ES is the stronger one. So that's a good point. Yeah, our ES already took out news high. I'd still would like NQ to follow through though, just because we've previous day highs drawn liquidity right now. If we're using this gap, nice 14 points up there, 20 points to target. We got news at 10 a.m. I didn't even actually look. We do have news at 10 a.m. Okay, sweet. I mean, just same exact stuff, right? Could be setting up for a nice buy metal. Especially the fact that we're manipulating here at 930, taking out the stops once more. I do like the fact that we probably should not ever take out this low again. In terms of the morning session, I'd like to see this low stay. It should not be retraded too. There's your swing high taken, and we're still reaching for the 20 points. Now that low at 930 should not be taken for the rest of the AM session. I don't really care if it comes and takes it for PM, but in terms of mechanics, I would like to see if we want to expand all the way up to here that this is not taken. With profile wise, it's a pretty standard. What is that, like Omega setup? I don't know. Someone probably has the PDF pulled up. But that's your ATM model right there, right? 15-minute liquidity sweep. Pull this up over here. Runs liquidity opposite of drawn liquidity. Form of a sell side pool. Closes above the stop run, right? We have a 5-minute candle that closes opposite right here at 935. And then we have a 1-minute fair value gap that prints after this 5-minute candle, which would be right here. Has to print after this candle starts. Order block, you could use that, or you could use fair value gap and brought it right, reach the 20 there. It could be a double Judas, but I would just like to see that news that comes in at 10 o'clock to reach us for previous day high. If you can just accelerate that and then chop around between 10 o'clock and 10:30, that'd be perfect. Although, yeah, since we do have 10 a.m. news, we actually could see some volatility still stay in the market till around 10:30. Yep, and that's also entry time 9:50, right? I'm leaving it right there. Can you write text on this? No, you can't. I should add that as a function. make some text on this line. Fair value gap with the order block as well paired up to the left of it. Another bisi here. That would also be within dealing range of, you probably would see a deeper retracement than just this. I'd like to see it run a little bit into discount of that short-term dealing range here. We just took out external range. Yeah, J square. I would like to see it come back into discount, either within this range or within this tiny dealing range here, which is all we really would need. But what is that? External to internal in discount, right? So this, you want to refine it down. It's really going to be this portion right here that should hold price. And a 5-minute bisi. Sweet. Yeah, that also could be retraded too prior to the macro. That is also in premium though. But there is a breaker next to it, so we're allowing for that trade in. If you want to extend the 5-minute breaker out, we can. I'm going to remove the old annotations really quickly. So really the only time you're allowing for bullish, right? And we see a market maker model starting to form. And I don't know if you remember in the 2022 content, most times your high probability setups are going to form in a discount when we're going long like this in the dealing range. There's 20 points, by the way. We want to go long in here and obviously target our premium PD array. The only reason it's going to be high probability and we don't need to return a discount in this case is if there's a breaker to the left of it and there's a fair value paired on top. If there is no breaker and you're trying to enter long in premium of that leg, and it's something like this, that most times is not going to work out for you unless you have a context of this is maybe a most recent liquidity sweep and we have an inversion for value gap here. Then that may work, but it's just wise not to do something like that unless you know exactly what you're looking for. Here's your 20 points, by the way. If you have time later in the day, make sure you screenshot your hourly 5-minute, 15-minute, 1-minute chart of this price action because this is almost perfect price action. Yep, you too. We'll see you on Tuesday. Don't you love this stuff though? When you know what you're looking for, just wake up, work for 20 minutes and get out, get paid the same amount you would if you worked a 9 to 5 sometimes. Doesn't get much better than that. All right, so we're still anticipating a potential retracement back into that range. Your dealing range will be a little bit more extended. There you go. There's your run to discount. I would still like to see that order block hold. There is no reason we should close below the discount end of the order block if we're going to reach for a previous day high. Unless if you go to the 5-minute chart, reaching to this gap, it wicks into the gap and closes out. So I guess we can close through there because we do have this bisi down here too. But the 5-minute breaker plus the 5-minute fair value gap, I think as well, right? A little bit on top of it. But if you can trade back into 18,511.75. By the way, there probably will not be a backtesting session this weekend. Well, I know there won't be. So unless we do it today, I'll take a vote at the end of the session if someone reminds me. Or actually, we'll do it right now. Tapping back into the bisi there. We didn't reach the breaker yet. Okay, there's your breaker tap. All right, yeah, someone remind me to do the poll later. 5-minute chart. Same thing here. You would not like to see really a close below the 945 candle. I forget that I have it pulled up over here sometimes. Hourly chart looking good. Still holding that hourly imbalance over here. And pretty decent relative equal highs up from Tuesday and Friday of previous week. ES is reaching for, was that previous week high? Yeah. Previous week high is up at 5322.75. So you could look forward to potentially reach up there. I'm going to put an alarm actually up there as well. 5322.75. And reacting nicely off of the 5-minute imbalance and the breaker. You want 20 points off that as well. It's going to be going to reach it soon. And look at the respect there. We're still holding this 1-minute order block. It does not close below the discount end. We just close right at the bottom of it. Actually, I think we missed it, right? Let's draw a line out here. Yeah, we didn't even close past it. So still respecting what we want to see. And there's your 20, almost 20 points. There you go. Multiple different opportunities this morning. 8:30, you could use this one. You could use this one. You could use this one. Took long off the 5-minute bisi from ES. Nice. And we should reach up. If you look up, go to the week. Oops, that's not what I want to do. What the heck is this? Wayfair? Okay. There we go. Previous week high up here. Make sure you annotate that. If we want to reach, it's not super far, 10 points. It's doable. NQ's having some trouble getting above this high. We did just wick back. The reason I'm saying having trouble is because we're holding this bearish order block and we're also trading within this fair value gap here. So you got to be careful now. We got the 20. If you took stab long off that unicorn setup, then hopefully you got one partial off already. Look for partial above 955 high. You want to start breaking it down into premium. Go to your 15-minute chart. We're looking for premium imbalances. You could use this one right here, which would be an inversion. When we have a large gap like this, or like this, you can look to the left of it and look for order blocks, within that range, or you can look to the left of it and look for gaps where there's inefficient price delivery. So there's something like this where there's a BPR, you can use it as a target. So partial, 20, there, and there. I mean, the 5-minute is just beautiful today. And reaching above. So yeah, there you go. Look for this fair value gap range for it to reach and trade into. That would qualify as a full external to internal on the 15-minute chart. So if you have partials on demo, I would be taking off. If I had a setup here, I would be taking a lot off in this fair value gap if you can reach up into it, and leaving maybe one runner for previous day high. View your 15-minute chart. Look, external range sweep to internal, and if we're going from sell side, it needs to be in premium now. So if you take our dealing range, I guess you could also count this as an internal range to external range, so you could see that high. But just to be careful, this fair value gap is in premium, and really is the only fair value gap we haven't traded to yet in the morning. But if we can displace through that range, that would be nice. And if you want to take your standard deviation measurements, silver bullet zone, 2 to 2.5 is all the way up there. You can even maybe refine it down. Basically the same thing. Yep, that's all you need, right? 15-minute sweep, 5-minute direction, 1-minute entry. Using a hourly drawn liquidity, ERL or IRL. And that's your bread and butter setup basically every day. You want decent moves, it'll give you decent moves. You want a macro time within there, you can just, label, or you can frame it and then use the macro time to get in, get out. You have multiple 20-point opportunities within that macro time. Yeah, every single day this week, the setup has been there. And it's nothing crazy once you understand what you're looking for. It's really only two different things. It's going to go, you're going to have an internal range setup and you're going to have an external range setup. I can draw these out quickly. You're either going to have a higher time frame for value gap we trade into. And I'm going to draw the bearish examples for both these. Whoops. We're going to trade into high, create a low, trade into the higher time frame for value gap. And if we trade into a gap, we're going to be targeting time-based liquidity. So this is going to be time-based ERL. Or what you'll do is you kind of flip it. You have time-based ERL over here. By the way, this would be time. You start looking in the kill zone right in here. Okay. Same thing over here. You just flip it on its head. Same thing. Same thing. And this would be a higher time frame discount balance. And this would be a higher time frame obviously you can flip this back and forth, but you take a picture of this and this is all you're really going to look for every single morning. It's either going to reach into a premium imbalance and go to sell side, or you can flip it. It's going to reach into sell side and go to a premium imbalance. And this premium balance is only going to be on the 15-minute chart or 60-minute chart. Very rarely can you use the 5-minute, but most times the 5-minute will line up with at least one 15-minute imbalance. So higher time frame premium balance to sell side to premium imbalance, or it's going to be buy side time based to a discount imbalance. on the 15, 60, or 5-minute chart. And that's a full model right there. And that most times will get you the entire New York session range. A lot of times if you're really good at it, and you can have multiple different entry opportunities, either your turtle soup. Oh, I didn't actually draw this the way I wanted to. You'll obviously have a fair value gap within here, trades into that, and that's your entry short. Same thing over here, right? I just didn't complete the model. There you go. Now you have a complete model. I'll screenshot this. Send it over if you want to. And all of this time-based ERL is all going to be the same. It's going to be the same. There's only a couple things that we're going to reach into. Ghost, I'm going to answer your question, then I'll get into this part. So he asked, could you give one example from this week if there was one of time-based ERL to higher time frame discount and balance? Just joined yesterday. Yeah, so if we go to, let's pull it up over here so we don't get messed up. I'm going to go to NQ exclamation point, so there's no annotations. Let's go to the 15-minute chart. Let's find a time-based ERL to premium imbalance. Here's one from Friday. All of these other examples were all internal range to external range. So here you have a gap. We also have a what was it? An hourly imbalance as well. Trades up into that. And then we have previous day low. If I turn on your PM session low as well, you can see that right there. So IRL to ERL. In this case, we have IRL to ERL after sweep liquidity. ERL, we also had a hourly imbalance over here. So technically IRL to ERL. Here is an example where you would use the second one. Most times this is going to occur when London session high and low has already been swept prior to 8:30. So you're going to be looking for basically the most recent dealing range that was formed. And to me, the one that catches my eye is this high at 5:15 and this low at 8:30, right? You're going to be going to your 15-minute and your 60-minute chart, and you're going to be looking for those premium imbalances. Well, if we're opening at 8:30 down here, I'm assuming we're not going to reach into a discount for value gap, right? I'm assuming it's going to be your sell side to premium. So you obviously will mark out any sell side liquidity pools. In this case, we're technically still trading up into this high later in the day. But in the morning session, 8:30 runs the sell side. It's 15-minute chart, right? And closes back above. And then you have above 50% a premium imbalance here. It's the only one that I'm seeing that's above 50%. This one's in line with it, but above it. Go to this imbalance. And if you go to replay mode, you can drop down to a 5-minute chart or a 1-minute chart and look for the same exact stuff we always look for. So here is 9:30, right? So we're targeting this after a run on sell side, and you just look for the same exact stuff. Well, 9:30, what's this? Sell side, right? What is above this high or even this high? You have two market structure shifts, and you have a fair value gap in here. And at a random time, you get an entry point. And it runs all the way up for, whoops, if I can grab it. Okay, apparently I can't grab it. Your balance there, 34 points. So it's basically the same thing. Instead of an ERL to higher time frame imbalance discount, it's going to be higher time frame sell side to premium imbalance. Everything else was this week was just the other way around, imbalance to sell side. And we're starting to sell off here. I really have no interest. Like I said, between 10 o'clock and 10:30, it's a little rough sometimes. But going back into this setup here, this is your ATM model framework, really. What are some examples of time-based ERL? Well, the major ones that I'm always looking for besides this is always going to be 15 minute, 60 minute, or very rarely a 5-minute premium or discount imbalance. Okay. There's really no other imbalance here that you're going to be looking for besides those ones. That's why I don't use the daily chart for draws and daily chart for like higher time frame analysis. It just doesn't give me enough data. But time-based ERL, what are you going to use in this case? Well, you have previous day high, previous day low. You have London high and low, which most times is a very, very good draw. Actually, I'll put this in order of significance. London high and low. Remember, this is all ERL, so you need to see a fair value gap traded to before you run the stops. In this case, fair value gap with a 5-minute trades into before it runs the stops, and that was the entry today, right? So London high and low. You have previous day high and low. You have PM session. I guess all these will high and low, so you can just, I'll stop typing that out. Previous week. And you have 1 hour market maker targets. That's an obvious ERL. So if we're in a clear, market maker model on the hourly chart and you have a swing lower relative equal lows and you want to target that, most times it'll still be in line with a form of external range liquidity. I'll screenshot this. I'll add it over there. And this is all you're going to look for. Don't complicate it by adding more random swing highs and swing lows. High probability setups, the ones that you're going to be targeting, are all going to be using these 5. And you can qualify this. You can qualify which one we're likely to reach for by looking for 5-minute consolidation or 1-minute consolidation that lines up with this external range liquidity. I'm going to go show you an example where we actually don't reach for a specific one of those, but we still reach for a pool. So over here, this is not previous day low. If you go to the hourly chart, I pull this back over here. You go to the hourly chart. It's a very clear market maker sell model, right? So we can use this as a draw on liquidity. It's not a specific session low that I marked out, but this is our market maker sell model, MXM liquidity pool. And if you go to your 15-minute chart, it actually is still a session liquidity pool. It's just lunch. So your lunch low is a target in this case. Very rarely will you use lunch low or AM session low or Asian. You really don't even need Asian session. So in this case, yeah, we are using lunch, but that's just in the framework of the MXM on the higher time frame. And that's all it's going to do in the morning session. So as long as you know, okay, we come at 8:30 or 9:30, depending on news, and we're looking for one of those two things as a draw. In this case, we're looking for previous day low, which is the PM session in London. Then you know that 9:30 or 8:30, whatever the open is, has a high likelihood of manipulating the other direction, right? So you most likely need to see either. That's why I said the 15-minute chart is very useful when you're looking at the opens. It's going to manipulate right at that start. So here's your 9:30. Right here, we manipulate above highs and into that fair value gap, which is what I'm more interested in. Premium imbalance, we can now target sell side. And then you saw the execution yesterday, 5-minute gap. Probably just pull it up. 5-minute imbalance right there. Lines up with the breaker. Short that. That would be your internal range on the lower time frame to external range on the higher time frame. And we reach down to previous day low, as well as another previous day low from Monday. But you don't even need that entire range, right? Like this range here, still a good 67 points. You're looking for 20. Here we have London high as target. You go back and backtest this stuff. It's just this stuff over and over and over again. For the New York session specifically, this setup is very specific to New York session. You can still look for, PM session, this will still work, but you want to refine down which ERLs we're likely to draw to. It's probably going to be your AM session, your lunch session, and then previous day high and low. That stuff is still going to be valid. But London high and low and PM session high and low are going to be your main two targets most times within the This is actually going to be previous day PM session high and low. It's not, obviously it's not going to be the same day, but this is your targets for ERL. And if you come to the chart, you look at your hourly, then you look at your 15, and this is standing out to you, it's going to go to that one, especially if it's swept the other side. Like if we already see a sweep of London low and we're holding a higher time frame imbalance, what do you think it's going to draw to? It's not going to go lower. If our higher time frame draws up here, it's going to want to reach for that same London high. So you just frame the setup based on time, first of all, around, you know, the 820 macro or the 950 macro or the 930 open. You could be using turtle soup entries if you know exactly what you're looking for. Like if you really know what you're looking for and you see the SMT, you could be going long right in here. Let's sweep to the sell side with the SMT there. That's definitely a more difficult entry, but when you get really good at it, you'll start using SMT at 930 or at 830 as your entry point. And then, you know, start using the standard fair value gap entry as maybe a pyramid opportunity. So far, we're just kind of wilted lower, and there's really been no imbalance fill in here. 15-minute chart is pierced both the 830 high and low. So it almost looks like seek and destroy right now. We're kind of forming this broadening formation on the 15-minute chart. If I pull it up, you'll see what I mean. It's kind of getting a little too wide here. Since about what, like Asian, right? That kind of looks like a broadening formation. If I put on Asian session, both high and low taken, high and low taken, high and low taken. It's low probability at this point. We already got multiple setups, so don't try and force anything within silver bullet hour, since we already know it's going to be low probability with 830 news. But that's really why I've turned off these two, because I don't really use them as targets anymore. If it's a clear target, you'll see it on the higher time frame anyways. But to qualify your higher time frame draws, I said you'll find 5-minute consolidation. And if you go back and look at all the times that we're drawing to a higher time frame point, whether it's London low or PM session low, that's going to show up on the hourly chart, right? That low is showing up, that low is showing up. So if we're using that as draws, and we know that higher time frame pairs to a lower time frame, and lower time frame pairs to a higher time frame, right? Your 1 minute pairs to your 15-minute, your 5-minute pairs to your hourly pairs to your daily, your 15-minute pairs to your 4-hour, all this stuff, right? Well, you know if this sell side is likely to be engaged, and we want to see a market maker model off of it, then on a lower time frame, this wick that was formed is going to be a form of consolidation on that lower time frame. So if you go to your 5-minute chart, we start looking at that sell side pool. There you go. There's your original consolidation. That's how you pick original consolidations. It's by looking at higher time frame levels, making sure it lines up with time. So this is not a moment in price. This is a moment in time, right? Like this range in here, we're looking at it on the x-axis. And then when it forms a low within that x-axis, we can use that as a draw. So when you're looking for original consolidations in the market maker models, especially on higher time frames, even on the lower time frames, like on the 1 minute, it's going to form relative to a higher time frame point of interest, like here. And you're going to see that, and you're going to use that as your original consol. And you can see, okay, original consol, first stage, second stage, smart money reversal, dips lower. This is your pretty deep first stage, then the breaker, and then runs lower, and just kind of wilts off that. But you can see kind of consolidation in here too, and you can go back and look at all of your draw. Oops, that's not what I want to do. All of your draws on the morning session. Where was price at the New York session? Well, here, okay, we're running out the high. What do we use as draw? External range. So within this low, you can't really see it's a swing low on the hourly chart, but now you have context of it's time based. So you go in and look here. There's going to be original consolidation. Go to your 5-minute chart. There you go. You can refine it down if you want. Original consolidation. Trades up, first stage, second stage, smart money reversal, trades back lower, and obviously you align time now to look for the second entry, the silver bullet, the second stage of distribution or second stage of reaccumulation within the market maker model. So now you know, okay, we have the hourly draw, we have a time-based draw, and it's showing original consolidation at the low end. So we know that most likely this area here is going to be our draw for the morning. Imbalances are going to show sometimes as they draw, like in here. Okay, it's pretty obvious original consolidation. I don't even need this box. You can see this entire range was just consolidating in London. The imbalances, if you go to the hourly chart and you look for the imbalances that we traded into, I mean, there's not really going to be a whole lot that we're using. Trying to find an example, like in here. We traded into this one, right? Did we even trade into it? I missed it. Okay, we'll use this imbalance then. You take this imbalance, you drag it over. Okay, so we know that assuming that we're running an imbalance here, we're going for stops, or if this is a stop run, you either want to see original consolidation in this range, or even looking here on the 5-minute chart. There's either going to be, well, there most likely is going to be original consolidation there, or within the London session, within here, and somewhere below this low. And if you go back to your 5-minute chart and look at all those boxes, original consolidation in this case was all of London. Oh, I think we already said that, right? All of London. We have original consolidation down here as we ran stops. Boom. And we should have original consolidation. If you go all the way back here, there you go. Right in there, right? And that lines up with your higher time frame fair value gap. So on the lower time frames, it's always going to be a quote unquote external run because we're sweeping liquidity, but that's going to be engaging a higher time frame ERL or IRL. So this consolidation is going to happen regardless if it's an IRL or ERL liquidity pool, but you know it's going to go from what, original consolidation to original consolidation, or something like this, right? It's going to go either from here to here and back, from discount to buy side or buy side to discount, or it's going to go from sell side to premium or premium to sell side. I think I'll probably just draw another box here. And you know that on each of these levels, there has to be a form of original consolidation, right? So when we're using something like this to frame a trade setup, you go from your hourly to your 15-minute, look for pools, and you go to your 5-minute and make sure that there is a market maker model that's forming. And then you can just use your standard entry techniques using time-based systems, so macros, volatility drivers, things like that, to get in, to get out. Hopefully that makes sense and clarifies some stuff up. Can't speak. But don't make it more complicated than it needs to be, because there's never going to be a shiny object that gets in and never fails. But just focus on putting all of the different pieces together and what makes sense to you. Like for me, that's an entire model, and I know exactly what I'm looking for, and I'm doing that same exact thing every single day. And it's not going to change. As long as this market's still here, it's going to do the same exact stuff. So why do I need to change a setup? It almost becomes boring because okay, I'm looking for the same exact thing every morning session. By the way, that setup is going to be low probability on low probability days. So Mondays, a lot of times it's going to go from ERL to IRL, which is going to be inherently more difficult because you're going to have to look for a higher time frame run on stops first instead of targeting. And then obviously days like FOMC or prior to NFP, you're going to have more difficult entries. But that's, you should already know that, what days are low probability. I think I have a Q&A post somewhere about low probability. It's probably like one of the first ones that was posted all the way back. I can't even find it now. Oh, I think I just passed it. Here we go. This is kind of a very quick list if you want to use this. And then you start looking at, if you want to get fancy with it, you start adding London profiles. So what is London doing? Is it consolidating? Is it protracting? Is it moving? And that's really only three different things, right? It's either going to be, London session is either going to be consolidating, it's going to be moving in a direction, or it's going to be protracting, meaning it's going to be manipulating down here, right? It's either going to be moving, and now you know, okay, if we see one of these things happen during London, there's a high likelihood that New York session is going to do one thing over the other, especially if we can frame it with the higher time frame bias. Everything's going to be based around higher time frame bias, and I'm going to keep drilling that in, because if you start looking at the 1 minute and this is the only chart you have pulled up, you're not going to find good trade setups unless you're looking at higher time frames, because it's always going to be drawing towards where there's more liquidity. There's not going to be more liquidity here on this candle than there is on the whole entire daily candle, right? So if London is moving directionally like this, a lot of times you'll have a Judas swing at 9:30. It pierces. You can use this turtle soup entry, and it runs again. It leaves it. Consolidation like this during London session most times is used as a target. So you either have manipulation in between 8:30 and 5 o'clock, and it manipulates, and we use this as a target later, or we use this as a PM session target. If we have manipulation in here during London session, then look for continued expansion during New York, and it either retraces back into 50% of the dealing range formed within, which would be your standard what? Discount IRL to premium buy side liquidity ERL. And this really is going to be your three things that London does. You can start pairing that up with your other profiles as well. And you can see we're just kind of consolidating around here. And look at this 5 minute. You can kind of see it over here. Not really, but see how this is 1 minute consolidation pretty clearly? What time frame does the 1 minute pair to? 15-minute chart. So you go to your 15-minute chart. Obviously, there's going to be a swing high there, but now it's relative equal highs, and you have an imbalance above it. So this liquidity pool up here, since, yeah, it's a high, but this also is a low. This is a low. This is a high, right? But since we have consolidation on the 1 minute chart, you can pretty clearly assume, especially if you get a setup, with time, that we're going to reach back up for this range. So we've just dropped into discount on the 5 minute chart and in the 1 minute chart here. Dropped in. We're at a time element, London close at 10:30. So if we want to run stops, or technically we already earned a deep discount, trades back lower, you have a market structure shift, and you can look for a market maker buy model on this side of the chart. Back up to a higher time frame, 15-minute, and a lower time frame, 1 minute consolidation. Would you consider the previous day New York close and New York open gap as an ERL? If it's a high and low, really the only times you're going to be using the New York open, so between 8:30 and 11, or 9:30 and 12, whatever you're looking at, as a target, is if it creates the lower high of the day, because then you're going to be using the previous day high and low. But if you go back and actually look at the days that we target New York session during a New York session, it's very rarely, partially because that liquidity is going to be taken either during lunch or during overnight, or like in this case, yeah, we're reaching up for, this is a Monday though, so you'll find very few examples where it does reach that. Here's an example. Higher time frame draw is bullish, but at 9:30, what do you see here? Well, kind of consolidation in this range, but we start displacing up. Premium buy side sweep. Well, if we're seeing a buy side sweep, we're going to be targeting a imbalance in discount of the current daily range. Well, current daily range to me on the 15-minute chart is not going to be this parent one. It's going to be the child daily range here to here. You look below 50% in discount, and my eye draws to this imbalance here. Send that out, and there is your draw for the morning. Obviously, it happens within 15 minutes. You have to, get in, get out. But what day is this? FOMC. So it's already inherently low probability, but you can still see the setup plays out there. You have to be very quick with it, though. either pulling the trigger on the turtle soup or kind of just waiting, within the first minute or so to get in and get out. But going to the second part of your question, the New York opening range gap, you can use it as a target for IRL because that's a pretty clear internal range liquidity pool, right? Because there's technically no liquidity there. If you're looking at RTH, it's just a gap. Me and Elijah Pips were talking about that yesterday with RTH targeting, because a lot of times if you're struggling with bias, just pull up the RTH chart and you can use, your 15-minute, and it's a pretty clear where are we reaching for? Where's the high and low of previous day? You can go back 3 days if you want, and look for liquidity. That's mostly what the algorithm is going to be looking for, unless we're reaching for, previous week high or low. But you go back 3 days and you start looking at the RTH chart. Where are the gaps? Where is the high and low? Excuse me. And you use that as draws. But to answer your question simply, it's not something that I'm taking into account because I'm familiar with the higher time frames. I'm comfortable using the hourly and 15-minute to look for gaps. So whilst I do think it's a good tool to use, I'm not going to be framing anything based on that as an IRL tag. Like, it's, if we're trading to the New York gap or the RTH gap, I'm not going to count that as an IRL run and look for ERL. I would still need to see, with electronic trading hours, a higher time frame, 15-minute or 60-minute, PD rate, pure value gap within premium or discount to still frame the trade setup. So it could just be simultaneous. I'm not really too concerned with it. Just like how I'm not really looking for SMT within every single stage of price delivery, even though within an MXM there's SMT everywhere. I'm only looking at after the fact just to confirm or reversing. I'm not using standard deviation to find the silver bullet zone or expected terminus. I'm not really using YM at all for SMT or you can get DXY all that much, because all you really need is in the chart. One chart, you get glued to that. Then when you get really comfortable, you can look at ES as well, for SMT. But you don't even need that, because you can already assume if we're reversing at a time-based interval, like, right at 9:30, and we have a bullish bias, then we're going to see SMT print, and you already kind of know that. Because SMT in this case confirms the smart money reversal. We're starting to get the market maker buy model here. This is where you could start using Cameron's model if you want to. Wait for a low to be swept and start looking for external range. But this gap up here is still my draw, I think, for the morning, although it's a little bit choppy. We do have a gap here. I'm going to remove some of this stuff. So as we trade into premium, you can look for retracement back into the range, potentially coming back for these stops. I don't really necessarily like that. I'd like to see a low form, and then we run that out, and then we trade back up, because imbalance to sell side. Exactly, yeah. High and low put in by 10 a.m. and you can kind of tell the broadening formation as it has been taking both sides basically every single time. With 8:30 news, between 8:30 and 9, you want to see the higher low put in, and 9:30 and 10 create the opposite side. So if you're creating a high at 8:30 or 9, you want to see the low put in between 9:30 and 10. You can see if we start annotating the intervals here, 8:30 to 9 creates a high and low. 9:30 to 10 sweeps both sides, the low and the high. Already showing you it's going to be difficult after that. Although I don't really know if we have to touch these highs again based on time. It's not too big of a deal, to be honest. Anyways, if it wants to come down and sweep these stops, I'm allowing for that. But it shouldn't take this low out if that's the smart money reversal point. Or on an even lower time frame, you could see a swing low with one of these candles, pierces that and trades back up. But this rejection block in here is technically a discount imbalance, or discount PD array, sorry. Or are we in a market maker sell model? One could argue that maybe on the 5-minute chart. I'm not too certain though, because we've not really confirmed the breaker yet, and this low would be our market structure shift, at least the one I'd be looking at. I wouldn't really be too concerned with this. Actually, if this is an intermediate term low, then I would say yes. Okay, well, this is an intermediate term low. So yeah, you could qualify this as a market structure shift. The reason I'm saying this is a market structure shift and an intermediate term low, if you look to the left and right, low and a low, and they're both higher than this one. So this creates an intermediate term low, and we are filling a fair value gap. So very nice example of a ITL. Watch how this gap holds. If we displace and close all the way through, then I would say market maker sell model. But with this consolidation, and we didn't reach all the way up into this sibi with previous day high above us too, still bullish on higher time frames. Like the hourly chart. The hourly chart is a mess, to be honest. All in here. This is a broadening formation, so it's basically just seek and destroy. Those are the days you don't want to be trading. All right, so we'll probably just go ahead and wrap it up there. I'm not too concerned with price anymore. Hopefully you're able to capture some of these moves either at 8:30 or within the macro time. And hopefully learn something about how price books with IRL to ERL and the setups. I'll post the latter part of the stream recording onto YouTube, probably as both a stream recording and a cut down version of that lecture in its own kind of video format. Oh yeah, poll. Thank you. It'll be today. So backtesting your Q&A. I can't really do anything past 7 p.m. There'll be no stream tomorrow. There'll be no stream on Saturday, Sunday, and most likely not on Monday. Because it's gonna be Monday PA anyways. So maybe I'll say 3 p.m., 5 p.m. We'll do 7 p.m. as well, just in case. These will all be in EST. I'll put the little labels next to it. So if you get a chance before you leave, vote if you want to attend. It probably won't be super long. Probably maybe like an hour or less for today. So there's the poll. Hopefully no one's colorblind. All right, yeah, so take a vote. If you're going to be away, that's perfectly fine. Yeah, same to you, Maddie. Enjoy your weekend. If you celebrate Easter or don't, please at least take some time off and relax and rest up for the new week on Monday. If you do celebrate Easter, then hopefully you're fame and you have a great time on Friday and on Sunday. We'll see you guys all, Lord willing, on Tuesday with some clean price action, hopefully. And stay safe the rest of the day as well. So appreciate you guys joining this week, and we'll talk soon. Peace.